Good morning, everybody. Welcome to the Flow Show, Wednesday, 5th of March. Oh, I'm done. Is it the weekend yet? Kay, help me. Is it the weekend yet?
Yep, it is. It is, Ryan. Yeah. We are restoring a 5-day weekend and 2-day work week, so we're done.
Yeah, absolutely. Thanks for coming to the Flow Show. See you next week. Oh, we can't complain. We moan when there's low volatility, and we can't moan when there's lots of volatility. And I joke, of course, it's all good fun. Right. That seems to be the case. Plenty to get through. So let's not beat around the bush and get straight into it. I'll see if I can rush through the headlines so we can talk about the market moves. China, they're having all their meetings and shindigs this week. They've set their 2025 GDP target at around 5%, which is a number they like to circle around for growth. They're also targeting keeping CPI at 2%, according to the official numbers. A government report was out saying that they will cut the RRR and other rates at a proper time or appropriate time. So that's still on the cards. I still think there's a chance we may get one after all these meetings are out the way. Got some PMI data coming through, services day to day. Starting off down under. And we got Aussie services coming in a little worse than expected, 50.8 from 51.4. So actually went backwards rather than forwards. Moving over to Japan, they had another improvement, 53.7. So still looking good over there. Coming further down, we had Swiss CPI for February coming in year on year, 0.3, a little bit softer. The EU harmonised number came in at 0.1% from 0.2%. Core inflation came in at 0.9 from 0.9 previously, was expected to drop 2 pips there. I've got to look it up. ECB meeting this month or next month?
Oh, it's tomorrow, huh?
Is it tomorrow? Oh, the SMB is not ECB, SMB.
Oh, SMB. SMB's the 20th.
The 20th. So is this month?
Of this month, right?
Yeah.
I'm just looking at the paper here. March we have SMB on the 20th and ECB tomorrow. We don't hear you anymore, Ryan.
Oh, sorry, mate. Is that inflation data going to do anything for the guys who put holes in cheese?
I wouldn't think so. They've already cut quite a bit, and they went with that cut last meeting where they could have held. So I'm going to take a rain check on that one for a call this month. Really, I'm not too sure.
Yeah, we've got 15 days. We'll worry about it later. Enough going on in the meantime. Right, back to the data. Spain leading the way once again. There was a little bit of a wobble in their manufacturing numbers, but the services numbers certainly going from strength to strength. A decent 56.2, beating expectations, up on last month. Italy, also an improvement over last month by quite some margin, 53 from 50.9 expected. All these other ones, France, Germany, Eurozone, are the final numbers, and they all pretty much improved over the flash number. France 45.3 from the flash 44.5, still a negative over last month though. Germany, they came in slightly less than last month, but they went backwards in the final number as well, 51.1. We're watching euro dollar closely over that after the Spain and Italy numbers, but that softer number didn't stop euro from busting 107. Pan-Eurozone number, just reflecting what we've seen, a little bit of softness, 50.6, just a minor negative, again, still down on last month. UK as well, services down 1 pip over expected, but still an improvement over January. So good news there. Italy retail sales coming in soggy at minus 0.4, but they did have a healthy end to the year of 0.6, so maybe just a bit of January washout. PPI data from the Eurozone, hotter than expected, had been looking to jump from the prior months, fairly low levels, but we got that much hotter than expected. One thing to note in all the PMIs, and that goes for all of them, price pressures are well evident in those reports, and quite strong price pressures as well. So that's going to be something that factors into ECB thinking. They're still expecting inflation to continue coming lower, but if the PMIs are anything to go by, it's not going to be a smooth path, as it hasn't been all the way through. Germany, they might be taking their foot off the debt brake, and they're looking at up to 500 billion in funds, which they're going to be calling an infrastructure fund. But there's also going to be defence stuff to play with as well. The Bundesbank has been doing some of the sums just to make sure they're all kept in check, and they propose raising the government's borrowing capacity to 1.4 of GDP from 0.35, so quite a significant jump, but only as long as debt is under 60% of GDP. They don't want the Germans, getting into the same positions as others, Spain, Italy, and the likes. They also say that borrowing to be limited to 0.9% if debt is over 60%, as long as all of that is devoted to investments. They say these new borrowing rules would give the government 100 to 220 billion euros by 2030. So that's part of all the debt brake stuff. So 220 billion by 2030. German government's looking at this 500 billion. So the magic money tree is going to get spun up a bit. Anyway, this German news has been one of the reasons why the euro has leaped higher. Germany putting the fiscal measures to work in boosting the economy. Obviously, going to be a lot of defence spending, but the market likes the sound of that. Okay, it is a big move for Germany. You know, they are very fiscally tight. So loosening up is a big deal.
It is a very big deal. In another era, it may have been seen as perhaps somewhere a bit a panicky move, also such a big amount of spending. But in the context that we have right now, we have seen how the market reacted to it. It gives confidence in that Europe and then in this case Germany is really trying to get their act together and do something. As Merz was saying, this is their all or nothing move, or what was Draghi's line again? I forgot.
Do whatever it takes.
Sorry?
The do whatever it takes line.
Do whatever it takes moment, and the market has really taken it positively, and I think in this, as I said, in this time, rightly so as well.
Yeah, as we said a few days ago, last week. Let's see if they can get the genie back in the bottle after, or whether it's going to continue.
That is the thing always with the Eurozone, as we've seen over the past years. There's always this little question in the back of our mind: how long is this going to take for one, and how long will the positive vibes around it last? But for the time being, we are just to put it in one single word, trading confidence, right? Whether it be on the one or the other side of the pond, and in a global context.
Yeah, and loosening your fiscal rules and your debt limits is a bit like me eating biscuits. I always want one more after I've had the last one. Right, moving on. Morgan Stanley, they're getting a bit more dovish over the ECB. They've changed their rate cut call. They now see a cut additionally coming in April. They were seeing one tomorrow and then next in June, but now they've penciled in one for April as well. So they now see the ECB rate reaching 2% in June versus 2.25%. the wider market is no longer pricing 3 ECB cuts this year. So that might just be a bit of a mechanical move on what's happening in European markets. Feds Williams says it's worth watching the University of Michigan inflation expectations. That's his viewpoint or on a piece of data to watch. As you know, we've been highlighting that for quite some time. There's been a lot of noise around these surveys, particularly the Michigan one, and how it's been split between political parties, i.e. Democratic voters pick something and Republicans pick another. It doesn't matter. Just take the data for what it is overall. But Williams has that on his calendar to watch. We're also now, I was joking about it, but it's actually happened quicker than I expected. We are now pricing, or yesterday we're pricing more than a 50% chance of a Fed rate cut in May. Everyone was thinking June, but given the mood the market's in now, and as I've been saying, it's the path of least resistance, if you like, is bringing those rate cut forecasts back in. We're now pricing May, 50% chance. Probably won't be long, Kay, till we're pricing March, eh?
Yeah, but get the twos back above 4%. It will be pushed back to June. So
yeah,
I mean, it's the bond market, is moving, and I've been talking about those pricing in is something that the market loves to talk about. Well, it's actually not the market talking about it. It is the Reuters or the Bloombergs or all the commentators are pricing in this and pricing in that. The bond market moves, and sometimes you have to do stuff. I mean, if you take for instance this 500 billion German money that they need to find, the yields in Europe are going higher because of the higher spending, because of some confidence and stuff. So we are rebalancing a bit between Europe and the US as well, for several reasons. Is that pricing out ECB rate cuts? I mean, that is not really how the bond market functions. The bond market in this whole episode, I'm sure that there's less than 20% of the bond traders who think about what is the ECB going to do next. This is not an ECB move, right? The yields going up, it's not saying that, oh, ECB cannot cut anymore. No, there is other flows going on, and it's in the global bond market. It is the same. So all this pricing, we need to be a bit careful with that, because as I just said, I mean, imagine that the US yields go up 10, 15 BPs, which actually the US 10s have already done 10 BPs from the lows. How are we going to price out, in between brackets, the next Fed move? The market would do, well, the commentators would like to think so. The market is probably not thinking that way. So, but to come back on what I'm saying regarding confidence, that may have an impact, because if we, for instance, now say that the confidence in the US economy is waning, that may then bring the bond market closer to and stabilizing there, closer to cuts. So that part of the rhetoric is correct, but when we talk about spending and stuff like that, that also moves, and in a big way, as we just saw on the European rates, that also moves the bond market a lot without immediately thinking about what is the ECB or what are the Fed needing to do, right?
Yeah, exactly. 100% agree with that. And you can look at, it's important to look at these things. You know, you say, talking about Germany, you know, we're up what, 20 pips, 25 pips over yesterday's low. That isn't, as you say, a central bank, you know, washing out cuts. That's the market saying Germany is potentially looking to borrow 500 billion euros, okay, in an economy that is doing pretty shit at the moment. How are they going to pay for that is the question. And so this is the market, this is investors saying, well, you want to borrow money from us when you've got a shit economy, you're going to have to pay for it. And so it's more an investor premium than anything else.
Yeah. Yeah, and that is exactly correct. And the market is telling them like you're not going to borrow those for free. Now, the thing is, if we're getting, and that's going to be the counterintuitive move, if we're getting better economic data, better economic data out of the EU, that premium is going to come back down because that is going to bring us back to the confidence element. Remember, and this the markets has completely changed, obviously, but we also sometimes have to remember what happened back in the 80s, 90s, especially around the 90s and stuff, where German economy had interest rates at zero. They could borrow, or very low at least. They could borrow extremely easily because their economy was zooming around. So there was no premium to be paid to borrow Deutsche Mark. So if the European data start to improve, we could see some kind of this as well. And then actually you see rates coming down a little bit just because there is a lot of confidence and people are okay to buy the German bonds that they will have to issue at some stage to pay for all this cash. So there's different elements here pushing and pulling without even thinking about what the ECB may be doing with all of this. Because if I just may 1 second, I think if the European rates fly on the back of those premiums being ramped higher, if it goes paired with an okay, I'm not saying that Europe is going to outperform the US on growth. I mean that is something for further down the line perhaps, but um, that it's going to push those yields far higher. I think instead of like counting on the ECB to hike rates to counter all of this because of inflation, I think they'd rather step in and buy European bonds instead of starting to think about hiking rates. And I just repeat, I think most of the major central banks would hate, apart from the Bank of Japan, of course, would hate to have to hike rates right now.
Yeah, exactly. That'd be a complete failure of their policies that far, and it's all totting up. You know, we're just talking Europe alone, looking at 800 billion for defence and whatever. Germany wants to tap up 500 billion. We're at 1.3 trillion just on one country and the main bloc, and that's Spain, Italy, all the others haven't started going on about how much they want to put towards defence. So yeah. The magic money tree orchard is going to get a hammering this spring, mate. Definitely. Right, let's move on. Get into all the political stuff now. So let's start with all the tariff bollocks. So we had all the mess that came. Commerce Secretary Lutnick popped up to say if countries can show they can stop the flow of fentanyl, tariffs can come off. It says on April the 2nd, we will start bringing car factories back. After that, Mexico President Sheinbaum started responding to Trump's tariffs, saying we are responding with tariffs and non-tariff measures. We will announce countermeasures on Sunday. She does have a call scheduled with Trump, probably Thursday. It says that US tariffs violate the Trilateral North American Trade Pact. That's the good old USMCA. Trudeau confirmed that Canada will impose 25% tariffs on 125 billion Canadian dollars of US imports in 21 days' time. Says Canada will not back down from a fight, and they will impose 25% tariffs on US imports worth 30 billion with immediate effect, and a further, as I said, 25% tariffs on the 125 billion. Both of them, Mexico and Canada, have given their own deadlines now. Mexico Sunday, Canada 21 days. Does that leave a bit of room for them? And then that's just before I go on to Lutnick's other comments.
Yeah, I think so, and it's quite strange that twice now we heard from Lutnick trying to play the good cop. I'm not sure whether that's a strategic move. Like like we saw in prior administrations, like the a bit like the plunge protection team, you know, is he part of that team now? It's a guess a legitimate question to ask
Yeah,
ourselves. Um, it does give them time, and I found those comments really strange just after what Trump said, and was very bellicose, and he's very close entourage with him. Um, it's this that situation is still, I think, very fluid because Trump can come out today and say like, "Hey, come on, I mean, don't take it serious," and Lutnick may actually be shown be shown the door. Who knows, you know?
yeah,
So that is a possibility we cannot completely rule out. On the other hand, we have to look at it through a now slightly more um, positive loop. And yeah, I think it may be a little bit of a positive because Trump could come back and say like, look, they have done what we asked for in the on the thing, and I trust as well that some of those bigger companies in the US must be whispering in some of the US administration's ears now, saying like hang on a minute. If Canada is like tariffing us now on their export of energy and stuff, we need that, you know. And
yeah,
if you want us to build American to for the American consumer to buy American, we are still going to need those people. So that is the situation where we are now. So fluid, but I think you're right in saying that there is a window still of negotiations and opportunity that is still open right now.
yeah. I think we still have to cling to what is the end game. The end game isn't to have tariffs. The end game is to get deals done. So as much as he's happy to put tariffs on and say how great they're going to be, um, he, he doesn't want them on. He would rather have this level playing field or whatever you want to call it, and get a deal done. And that's the whole thing behind all these threats, and that always sits at the back of my mind. Yeah, obviously prices and headlines are moving stuff around all over the shop, but you've got to
But
keep an eye on that end game.
yeah, exactly, and it's also and okay, I don't want to complicate things unnecessarily because, as I said at the top of the show, I mean, what we're trading now is just confidence, you know, in one word. But everything is still axed on manufacturing and things like that. Okay, he gave that comment on the Canadian banks, and we were musing about that in our chat room. Where exactly are the Canadian banks flooding the American market? It's much less on services in this day and age because I think he knows pretty well that the level playing field that he can have is he can only justify on manufacturing because on services, US is flooding the market on with services, right? Which is not really showing up in manufacturing trade balances, but
Yeah,
I think yeah, the global balance is negative, but the US is rather flooding the rest of the world's markets with their services, right? So I think it's something that we may keep in the back of our mind because if he starts to hammer too much on things that the US may not like, the US biggest companies may not like, he may have to water down a little bit at some stage. What do you think about it?
yeah, no, absolutely, absolutely. I think that is one of the case. It does get a bit murky, you know.
Yeah,
You look at things like pharmaceuticals production; that's classed as services, even though you could probably class it as manufacturing or along the like. So it is all messy. But yeah, you're right, and I think Canada's shown that by how hard they've come back with a response. Because I think, like you say, they know the pinch points for US firms as well. What's going to impact them, things like energy and whatnot, irrespective of Doug Ford putting Twinkies out of liquor stores in Ontario. That's probably the biggest news we got yesterday. But Vincent, you're right. Negotiations could be drawn out for much longer than anyone expects. We've already seen that. Trump took office in January. Said tariffs were coming in February. That got kicked to March. Then we got this April stuff. It's all fluid. It's all changing, and that sort of highlights the point. It's the purpose is to get a deal done, not to put tariffs on. Now, for trading it, we'd like it all to be nice and clean and set by dates, and no doesn't move around. But unfortunately, as we've seen this week, that's not the case. So we just deal with what we got in front of us. But anyway, back to the Lutnick stuff. So he did come out later on, or late last night, our time, to say that Trump is likely to compromise with Mexico and Canada on tariffs, and he may lower those tariffs today. So already we might get a move on now, and he's expected to get an announcement today. His sources also reported that Canadian Finance Minister LeBlanc had spoken with Lutnick, and that discussion took place yesterday. So again, they are still talking behind the scenes. Now, the problem with Lutnick at the moment is he was fairly bullish on all this stuff coming into this week, and then, as we know, Trump stomped all over that. So as Kay says, we're slowly starting to find out Trump's circle and what they're like. Lutnick seems to be the good cop. Vance seems to be the hothead. Besant seems to flick around between good cop and bad cop at times. And all this is going to be important to know, because then you know what you're going to get from these guys, and then potentially how Trump's going to react to it. But yeah, we had in his last administration, if you didn't like someone because they were saying the wrong thing, they were out the door. See you later. That possibility is still here again. Now, beside all that and everything going on, we are now pricing in a 95% chance of a rate cut for the BOC this month. These expectations have been all over the place. They were less than 50% not a week ago, if I recall correctly. Now we're 95% sure of a cut coming from the BOC. Next, we've got Mr. Trump speaking with Trudeau on the tariffs. Apparently he's doing that this morning, so we'll see if that brings anything as well. And now we move on to the Ukraine stuff. It's never ending. So we've had an absolute 180 by Zelensky. He seems to have done a complete fold. He said he would like to reiterate Ukraine's commitment to peace. He is ready to come back to the negotiating table with the US as soon as possible. He's ready to work under Trump's strong leadership to bring peace. And talking about what happened at the Oval Office, he said it's regrettable that it happened this way, but it's time to make things right. He, again, is ready to sign the Minerals and Security Agreement at any time in any format. Sources are saying that they're going to prepare to sign this deal. It was touted for yesterday, but that got kiboshed by Trump himself. But Trump came out and said in his speech last night that Zelensky is ready for renewed talks and the minerals deal. And he received an important letter from Zelensky today, and that he expresses his readiness to resume negotiations, and that the Ukraine is ready to sign the deal. So again, we're back on with that palaver. Let's see if it turns out differently to this time. Again, that's another thing, another boost for risk as well. Putin is going for the Nobel Peace Prize now. He's apparently agreed to help Trump broker nuclear talks with Iran. There were rumours that Trump had reached out to Putin to help broker these talks. So a lot of people, particularly in the US, thinking that Trump's getting too pally with Putin, but I'd offer a concession that if it helps get the Ukraine war stopped and stuff sorted out elsewhere, then it's worthwhile doing it. It doesn't mean everyone has to like Putin and make him your best mate, but let's look at the end game. Let's stop the bombs dropping first and worry about it later. Right, that's it on the headline front. Unless you've got anything else, Kay?
Thanks, but no thanks. Well, yeah, we have one thing. The two sessions are starting in China, right? And they have reiterated their growth plans for 2025 to 5% of GDP. That's higher than what the market would have well, at least was expecting, especially on the back of tariffs. It may seem a bit like utopia, but also there should be headlines coming through soon about how much they are going to pour into the Chinese system as well, to try and revive the whole thing. So that is something that's going on as well. So we should keep an eye on it because it could have an impact on the Chinese yuan, but also the trading partners such as Aussie also.
Yeah, thank you very much, mate. Right, let's see what's going on. The big news probably that everyone's looking at is what's going on in euro dollar at the moment, which had the break yesterday of this 105.30 level finally. It took a while though. It wasn't that explosive a break at the start. We got to run up to where I thought it might run into trouble, up into these fibs here. But the real key move, as I've been explaining, we haven't managed to do it. We did it yesterday. We held a break of 105, and more importantly, we broke 130, pulled back, and held that 105 again. And that really was the springboard for what we're seeing here and now. And technically, it's doing all the right things as well. We didn't stay long at 106 and this 106.10. We broke above that. We then started to hold it. That's given us the second leg. We've gone up through fibs, levels, and whatnot. We even broke 107 pretty easily, and that was a real tough nut. That was probably my bigger level since the 105s, and we went through it pretty easily. We're back below it now just by a few pips. This 107.25 level is just an old level, but it also has the 200 DMA sitting there as well. So for now, we might be at a bit of a stretch point, but I thought we might be stretched when we got up to 107 and we still went through it. Kay, it's been a real strong rally. I can't remember the last time we've had 200 plus rallies on the trot. Can it keep going, or might it be running out of puff?
Well, yesterday, as we spoke about it, and the question was, can we see 106? I mean, we saw it, and it didn't even stop there. Look, for a week now, I've been saying that we may be close to an inflection point on the dollar, and the euro is exceptional in the sense that the euro dollar move is exceptional in the sense that we have less confidence in what is happening in the US, to just keep it to one word, and more confidence to what's happening in the EU. And this is not necessarily a today data move, but an expected move to what is happening, and a reality check on Trump's policies. And so the two together, as we were saying, like finally Europe is getting its act together. Like look through or put aside what is going to cost them. It is so a double whammy actually that we saw for the euro. And as I said, I've been calling for that even on the face shows as well. And here we are. We are trading it, and can it go further? I think so. I really think so. At least in the short term. Then we will have to look very closely at what confidence data are going to tell us now in the eurozone. Because if they start to turn up a little bit, this move will likely continue. Whether it's be 106, 105 and a half, 105.30, 105 even, if we get back down. But I would say if we get back down to 105, there may already be something happening. But it would be now ideal that we get a retest of the 106 to see if it's really holding. And then I think we can say that we're probably on our way to higher levels. I kind of like, if you go back to the wider one, you have a blue zone above there.
My 108
from 108 up to what?
108.30. That's
Yeah, I think that's another interesting one upcoming.
Yeah, that's a big one.
Yeah, that's another interesting one upcoming, and obviously the 10 the last spike there before we dumped down to 102. The last high is also going to be interesting. But that's if you look at those levels. But the thing is, right now, and again, I'd love to see a retest of 106 to know exactly what's going on there. But if this is really the confidence trade and the unraveling of the Trump trade, we can go a lot further, and we could be in one of those kind of moves where you say like, well, the charts are just there for being a nice picture, and because we can also not forget that now that we have broken above 105.30.35 for 106 figure 15 or figure 20 for 2, is that just on the flow side of things, momentum funds may view this as a reversal, and they are probably going to start buying every day. I think now it's going to be important to have a look at what's happening at the 1 a.m. London time, what's happening around 12:30 when the Americans come on. What is going to happen, perhaps even on the London fixings, because some asset managers, when they do their bond trading and their equity markets rebalancing of portfolios, they may give orders at fixings to have benchmarks rates. So I mean, all of those little moments in the day could start to be important, even top of the hour sometimes, if the model funds are getting involved. And we could see easily those moves continue to be fueled without actually too much fresh news. So yes, we are in a very interesting period for the dollar in general, and then for the euro dollar in particular.
Yeah, and this zone is actually 108.30, 108.70, not 108. I've had this on my chart for 8-9 years. This level,
yeah, exactly what I was going to say. Remember, we were looking at this zone in the 108s for ages already.
Yeah, way back to 2016. I was trading around this zone. I can't even get it there. There you go. Just about get it on the on the page. So yeah, it's one of those places. You get a lot of traffic around it, but it's one of those places when you haven't been there for a while, you're going to see it have a reaction. You know, as much as, you know, I always look at my wide charts. You've got your big levels here. You're always going to get a reaction around these big numbers. You know, 5 levels, big levels you can trade, but then you get all these zones and whatnot. And yeah, if we get up there 108, 30, 70, it's going to be a big old area. There's lots of plates spinning. Okay, you can't just say it's one thing or another. You know, I think there's what's going on with the US, as Kay says. There's what's going on in risk and this Ukraine stuff. There's what's going on with the German borrowing and everything like that. And you just can't trust. You still can't trust a move. I'm long, but I'm not buying it because I think Europe's suddenly going to start booming or being great. It's possible, but I haven't seen enough evidence to be a euro buyer on that format. And Trump could come out in an hour, 2 hours, sit on his bog with his phone, put out a truth bomb. Well, we're sticking 50% tariffs on Europe, and in 5 minutes we're back at 105. So you've got to be careful. I've already been speaking to someone on Twitter who was short and kept shorting and kept shorting and kept shorting. Okay, you need to know when you've got a break on. You know, technically, this is what I want to see when I do break trading. When you've had a big level that's been in play for 8 months, 6 months, whatever, when you get a break, that's exactly what you want to do, what you want to see. Sometimes you don't. I didn't think we were going to get this, particularly when we ran in, 30 pips higher and we hit our head already. But people who have been playing the short side and it's been working now think, oh, I'm going to hit every rally because it's going to pull back again. That's the dangerous time. If you want to short this, you need a top. And you need more than a top on an hourly basis. Okay, we've got a marker now up at that 200 DMA 107.20.25. Okay, if we go up there and we hit it and we hold it, then you've got something to short against. Maybe you can pick the 107 level. We're back below. Are we trying to hold below? Yeah. So we've got a couple of candles now holding below that 107 area. So now you've got something that if you want to short, this is where you can try it, because you don't have to be wrong by much. Over 107.25, we're keeping on going. Okay. And now we've got these minor levels in the way. 106.70 was a minor level. 106.35.40, we had bumped our head there. That's a place to look at for support. Okay. But know when you've seen a big break that you don't ignore it. You don't think, right, I'm just going to fade it because it's going to come all the way back down. We may never see 105, 105.30 for 10 years. Who knows? You just don't know. So know when a market has changed. We've changed now. Between what has been going on here, down here for months, we've changed. Something has changed. And just see what it wants to do. Right, I'm going to, yeah, go on, mate.
And I would say keep an eye on the euro crosses, because that's going to give you an idea about the confidence in this move on the euro side. Okay, we've seen the dollar getting a slap against everything. I mean, dollar mix is 2.5% lower from yesterday's high. Aussie is up, cable is up, and it's going. So there's a big part is a dollar move. There's another part which is a euro move, and that's where I always say that keep an eye not only on one pair when you trade a currency. Well, the dollar is obviously dollar pairs, but if you trade euro dollar, for instance, keep an eye on those euro crosses as well, because, and I would say euro yen, euro sterling, the euro against the Aussie and the Kiwi, if they start to turn after this jump that we saw, that may mean that the euro dollar move is also going to slow down or see that setback also. So I think it's a case, and I know not everybody is doing this. A lot of people are just watching 2 or 3 pairs, but as people gain more experience and stuff, I think we need to widen our horizon a little bit as well. And if you want to know whether a move for a pair is viable, or whether it's going to slow down, keep an eye on what's happening in the crosses, especially that the euro is a very important currency. So what's happening in the crosses is a driver for also what happens in the euro dollar, right?
Yeah, absolutely. And there's euro sterling. You couldn't find a bid in it for the last since pretty much the beginning of January. You couldn't find a bid, and all of a sudden it's done probably nearly 50% of that move. I even got a fib on there. It's happened so fast.
We are very close on one here. There's a bit of resistance coming in here. Anywhere between where we were, really 40 and 60. It's a bit of a resistance area.
Yeah, exactly. It's funny. Look, how the fib naturally lines up against the some of the prior high. I would have loved this down in. I was itching for this. It was actually my play of the day with Michael. Get a move down to that 82.20s again, those lows, to get into a long. You know what? I sat there and I thought, 50s. Do I fancy paying 50s the other day? And I thought, no, I don't want to pay 50s. I want to pay closer to 20s. And, well, the rest is history. We have to look at what goes on now.
Yeah.
But again, I suppose we've got to look at this one from the other side. The Europe isn't fixed. We start getting rallies back up to 84s, 85s. I'm probably going to be looking at maybe getting on the short side of it.
Yeah, that's going to be the sign. If euro sterling turns around, it may drag other euro crosses as well.
Very much so.
Anyway.
Anyway, moving on. Ali, you missed your pending orders. Oh, unlucky, mate. That's you know what? I talked myself into the break trade, as I was saying on the show yesterday. I talked myself into it after we were talking about it. So fortunately, managed to ride that bus for a while. Right, Kate, let me put it over to you because.
Sure. And what I'm going to do here is, and I never look at at those things usually, because I'm actually not really trading them. I'm trading perhaps sometimes different ones, but we have to look at what happened in the Nasdaq there. And when you look at correlations, when people think about, oh, what's going on in the market, why is euro dollar flying? Well, one of the reasons that euro dollar was flying, as I said already a couple of times on the show, is confidence in what Trump can achieve, confidence in what um, in his in his things, and one of his things was really tech, right? So we've seen this, and yesterday, and from actually already a few days now, Nasdaq started to show a few weaknesses. This is what I'm saying, and what I was saying last week. I mean, we may be near some kind of an inflection point for the dollar, and again, the confidence trade. This is showing exactly what the market has been doing as well, and this is a case of confidence. Now, have we broken down? No, we are not even at the 50% move of when we started to have all those all those comments and what's going to happen during Trump's reign and stuff like that. We're not even at the 50% of that move back down yet, which comes in at around 19.75, which is, by the way, around where this trend line comes in. So is the Trump trade undone, or at least partially? We've seen like very big drops in sales of Tesla, for instance, coming through. So the people are reluctant now to stay on board of what people can call the whole Trump trade, right? But we haven't broken down yet, okay? In the bigger scheme of things, look at this move here. We are not even at the 38.2. We are not even at the 23.6, but we're getting a bit closer here. But this is what I mean in those kind of moves. So about the confidence in a move. So this is something when we try to talk about fundamentals, when we try to look at the market from a sentiment point of view, because this is fundamentals create sentiment and confidence. This is what we mean about all of this in this show. So, and then you look at the text and say like, okay, what have we done? Have we completely undone it? Yes, no. In this case, no. So this could only be a setback. So that's where we say, is euro out of the woods yet? We don't know yet. Okay, but if this move continues here as well, and for instance, if the U.S. yields continue to be capped at the same time, then we can say yes, this move can have like really legs. So that's where I'm saying like widen your horizon a little bit. Don't look at like a picture in the 1 hour or the 15 minutes or even the 4 hours in one currency pair and then think you know what the market is going to do. No, you have to know what's behind it. Okay, people say like everything is decided by the price, but I would argue fundamentals and sentiment and confidence are putting the market where the price is at that time. So I'm looking at it from a bit of a different perspective. But then I obviously look at the text to tell me where we are. So just quick one here. As I've been saying on many of the shows, I think 420 is about where I see neutral zone. Yeah, it's down to 413 as well. But look at where we have always had some traffic in the US tens. We are in, to what I'm concerned, in the neutral zone. If there is more worries about growth in the US, this is going to come. This is going to come down, regardless what inflation does. Okay, if there is a concern on growth, this is going to continue to come down, and then the dollar is probably going to continue to get hammered. Okay. What else do you guys want me to look at? Because I'm looking
Dollar
at
yen's holding up pretty well again. Just when we
huh?
think it's going to fall, dollar yen. Just when we think it's falling out of bed,
This is
it bounces again.
this one, is this one. Is this one doing the whole thing? Yesterday
Yeah.
we were there again, and I was musing in the room. I said, "I'm going to get very angry if this doesn't break soon," and it didn't. It held again, and we are now already back through the zones here. This is the always a bit the danger when you trade yen, because it's now definitely a volatile currency, as we have seen of late, and then yesterday as well. Market is tries continuously to be short euro yen. I was in the same in the same boat yesterday as well. I was looking for the break, and then luckily, just before leaving the desk, I covered it. And now we're trading three and what do I say 300 400 points above yesterday's low. Yeah, this is what the yen does to you. I'd argue that we still may find rally sellers, and because the euro may not be completely out of the woods, but it's a bit dangerous now, and this is a very good hold. Okay, so for the medium to longer term, this is one massively good hold. So we need to really respect that level. Shorter term, we are already back above that little trend line here, and as I say, we can be on our way back to perhaps high 160s, why not 162 before we think again. The tailwinds for the yen have not really changed. There's nothing worse for the yen, and I think that is somewhere where the dollar yen we can still lean against those levels around here, up above 150.80, all the way up to 152, because I just want to remind people that the weekly cloud is coming in there. Just need to zoom out a little bit. We are trading in it, and the top is just above that 151. Just keep it in mind, okay? Everything up to 152 is going to be a big zone, okay? I'd say the tailwinds for the yen haven't changed yet, but um, it's trading a lot on the crosses, and we know that yen is a confidence thing, right? Look at what happened on the snapback of the euro yen, because there's more confidence in the euro. At the same time, we have done, and if I may just take one more minute, Ryan, of the time. We did break under the support line in the S&P, but we held here around the 38.2. Actually, down to the peep, and now we are back testing closer to the broken trend line, and the snapback on over 100 points on the S&P has also supported yen crosses, because yen is trading also with sentiment right now. Ali, gold quickly. You know what I've been saying for a very long time. Gold is at least partially, it is trading on the back of yields, but it's partially a hedge against all the bad things in the world. And if you start to talk about potential deal on minerals in Ukraine, if you start to talk about brokering deals left, right, and center, in on geopolitics, and if you see, like for instance, now there is a bit more confidence in what's happening in the eurozone, that they get their act together. Maybe the people need a bit of a less of a hedge against bad things. Okay, if we get like really big growth concerns coming up, I think we can go higher again. But in the meantime, I would say it is logic that it is underperforming silver, because I've been saying so often silver needs a better, more positive environment to thrive. And we have all this spending on defense and stuff, and this is going to support it, of course. But on the other hand, if you look at it from a risk point of view, silver is outperforming gold, and this is a clear example of what we saw over the past few sessions. Silver is outperforming gold because silver needs a little bit of a better or more industrial need and stuff like that to outperform gold. And I think that is what is about to is relative to what's happening right now, Ali. So I am not so surprised that gold is underperforming silver today. And also bear in mind that little zone that we have here in the 2920s up to 2930, perhaps. It has been a zone where gold has found bottoms and tops. Okay, so we are in a bit of a zone here. I am not involved in it right now. I bought it the other day on the tariffs, really, when Trump put the tariffs, but I took my profit yesterday in the 2920 zone, and that's it. I'm just nursing my long-term silver longs right now. That for this one. And I think, Ryan, I'm going to give it back to you. Just looking at the time.
Yep, thank you very much, mate. Oh, these shows are stretching on and on with all this news going on. We'll have to look at that. I think maybe carve down some of the headlines or something. Anyway,
Yeah.
big day today, coming today, ISM, ADP, everything else. So it's going to be a busy one. And then obviously we ramp up for the ECB and NFP. That's a part of the week. It's going to get busier and busier. Take care, everybody. Thanks, Kay, as always. And we'll see you all tomorrow.